Hi, it's John Kelly. In this module, we are going to discuss the practical limitations of an auditor finding fraud and error in an audit. Now, what I have done here is collected from professional standards, mostly 200 and 240, the limitations that are described in professional standards on the auditor finding either fraud or error. Now, Section 200 and also a bit in 240 describe why a well-done audit may not find fraud and error. And this is something of an expectation gap because many people expect that an auditor will find every possible thing, and that's not the case, and that is often misunderstood. Now, 200.5 tells us that an auditor gets reasonable but not absolute assurance, and that there are inherent limitations in an audit that mean that we cannot get absolute assurance. And one of the most important limitations is that the evidence available to an auditor is persuasive, not conclusive. So we can't get perfect audit evidence, and in the absence of perfect audit evidence, we can't get absolute assurance. A45 tells us that the auditor is not expected to and cannot reduce risk to zero. We cannot get absolute assurance, so that's clear. A46 tells us that many financial statement items are subjective and or variable, and that subjectivity or variability cannot be eliminated with audit procedures. No matter how hard we audit allowance for doubtful accounts, we will never be able to be absolutely sure of the right number because only the future will tell us. And they're specific. They say that, for instance, accounting estimates are often very difficult to audit, and the subjectivity and variability cannot be eliminated with audit procedures. Other limitations of an audit are that complete information may not be given to the auditor either by the client or by others, and that audit procedures that are effective for finding error are not going to be effective for finding fraud, and that there are no procedures to guarantee that fraud can be found. The other thing is the auditor doesn't have a legal capacity to investigate or search. There are limitations to what we can do as an auditor. We don't have the legal capacity that, for instance, the police have to investigate something. The other thing that A48 tells us is that the auditor has to balance between timeliness and accuracy. The more quickly you get information, the more valuable it is to you, but the more quickly the information is available, probably the less accurate it will be. And the longer you have to produce the information, the more accurate it can be. So there's always going to have to be a balance between timeliness and accuracy, because information that is very, very old is not particularly useful to the person that wants to use the information. So there has to be an understanding that the auditor does not have the time to fully address every matter, and it will be impracticable to do so. So users of financial information have to understand that. Other items are hard to audit. Related party transactions, 550.7 tells us that we just may miss stuff. It's hard to audit. Laws and regulations, illegal acts. We have no responsibility for laws and regulations other than those that have a direct effect on the financial statements. So that means that there are going to be many laws and regulations that we just have no responsibility for. And going concern, whether or not the entity is a going concern, well, auditors cannot predict the future, and it's the future that's going to tell whether or not an entity is a going concern or not. We can't predict the future, and that's in 577. The other thing, fraud is hard to find. Section 240 tells us that. Tells us that management is responsible for finding fraud, not the auditor. And the auditor's job with respect to fraud is to follow the standards. Do the things that the standards require, and if that discovers fraud, good. If we do the things that standards require and fraud is not uncovered, we've done our job. And there is an unavoidable risk that material misstatements may not be detected even though the audit is properly planned and performed, and people need to understand that. And we may not find fraud because of sophisticated concealment or collusion. Those are two inherent limitations that affect our ability to find fraud. Another inherent limitation is that management fraud is even harder to find than normal fraud. So if it's fraud perpetrated by management, we'll have a very, very difficult time finding it. Now, none of this is an excuse for the auditor not trying. The auditor must follow professional standards. So it's not an excuse for accepting less than persuasive evidence. We have to look for and obtain what we think is persuasive, but not conclusive evidence. And certainly every auditor would wish to find everything. If there is a misstatement, be it error or fraud, we'd all really like to find all of that. But we also have to acknowledge, and people have to understand, that we're not going to. So this isn't an excuse for not following standards, but it does emphasize the importance that we document what we have done, because if the auditor documents that they have done an audit in accordance with professional standards, they've got the proper evidence, they've assessed risk of material misstatement properly, then the fact that a fraud was missed or an error was missed is not the auditor's responsibility. The auditor is responsible for following professional standards, not necessarily for finding error or fraud. Now, to also emphasize the importance of documentation in an audit file, standard setters are proposing that soon all of these limitations will be placed in the audit report. And this is an attempt to address the expectation gap. So users of audit reports will be able to read the audit report and fully understand all the limitations of an audit and the things that an auditor might find. For instance, the limitations on error and fraud could be included. And also, for instance, the auditor would say, I can't be expected to determine whether or not this entity is a going concern, even though I've done procedures as required. But the future will determine whether or not it's a going concern, and the auditor can't. So, thanks for listening.